Awesome. Well, wow. Welcome back. Welcome back, everyone, to Webit. Big shout out to the team, Plamen, and the rest of his team at Webit. We're here digitally in the digital portion, 2021. For those who don't know me, this is Jordan French speaking, executive editor, founder, and publisher at Grit Daily News outlet based in New York, covered over 10,000 startups and won some awards for it. I'm here with some exciting guests to talk about the social contract, banking more broadly, and solutions around it, especially in this time of potential turbulence, needing hardly an introduction, though. Thomas Courtois is with us from Nickel, and John Egan, from CEO at Atelier, part of BNP Paribas. We'll unpack that in a bit. Thomas, I just want to jump right in right here, get an intro from you. Those who are uninitiated on Nickel, can you just share a bit of background, lay some foundation on what the company does that you founded 8 years ago?
Yeah, hello Jordan. Hello John. I'm very happy to be with you and with all of you today. So what is Nickel? Nickel has been launched 8 years ago in France, and to with a simple idea is to provide to everybody a current account to receive their revenue and to pay in their daily life. So that was very basic, and they launched this offer through a distribution channel, which are tobacco shops in France. So we are very digital, but we have a physical network of point of sale, tobacco shops in France, and with this very simple idea, with this simple product and this distribution channel, we've built an incredible success because we captured more than 2.6 million customers in France, and now we are expanding our activity across Europe. We launched our activity in Spain last year. We will launch our activity in the next weeks in Portugal and Belgium, and next year in Germany.
Very cool. Nickel, a reference, of course, to the metal, and also the coin started out small, but impacting a lot of lives. And we'll get into how the company's evolved. Speaking of evolution, you and John, and no secret here, but for the audience, worked together. John, I think it's a great way to introduce you. If you could just share your relationship between you, John, and Thomas.
I'll start by saying I think Thomas maybe understood Nickel a little bit as well. I think that when it was launched, the extraordinary elegance of the proposition was part of why it took off so quickly. But it did this really interesting thing at a time when everybody was obsessed with early fintech, which was it attracted both a customer base, a significant one, which most fintechs were struggling to do, but it also captured the attention of large corporate institutions as well, who saw it and realized the opportunity and the potential within it. The way we're related is that we both ultimately form part of the same group. We are satellites orbiting the same planet. My business, Atelier, is part of BNP Paribas Group. We are a business that focuses on machine learning and various forms of artificial intelligence to understand emerging opportunities at the intersection of social change and technological change. So the emergence of new markets, the emergence of new asset classes, the emergence of challenges as well that appear there. So we can go into that in a little bit more detail if it comes up, but that's the relationship and that's the nature of our business. So quite different businesses that sit within the same house.
Yeah, certainly, and it's always great to have people on a panel who've known each other for a while. And there's one thing that we'll pull on the thread of your conversation about Nickel understanding itself in just a moment. To set that aside, to unpack your role at BNP, a lot of people know the bank, broadly. They first initially think of it, John, as one of the big I banks, especially French national champion. An answer to perhaps Germany's Deutsche Bank or a Goldman, a JP Morgan, and so on. But fewer people know the sort of Atelier portion. What specifically are you doing just to unravel a bit people's assumptions that they might have about you? What are you doing specifically within the Atelier division, John?
Sure. Yeah, people are familiar with BNP. It's one of the biggest banks in the world. It's got a global footprint. Biggest bank in Europe, and the Atelier, have existed for almost 45 years now. During that period, it's always focused on emerging technology. what we've done over the last few years is reorientate that focus away from a qualitative understanding of emerging technology to a very explicit quantitative understanding. So we build engines capable of digesting massive amounts of data. We have one technology engine that looks at global academic data, global IP data, global grant issuance, and global investment data, analyzes that so we can understand what emerging technologies will look like in the longer term. That informs technology intelligence for national agencies, for large corporate R&D functions, for investors, for consultants. We also have a social intelligence engine that is capable of doing non-query based trend identification and is able to algorithmically score the momentum of those trends so we can see what's going to be important in years to come. What's the next major conversation or major protest movement? Will a politician's manifesto be effective in 4 years' time? Will a movie or will an album have an audience in 5 years' time? That's the sort of work that we're able to do. So we build these engines that are attached to a very large machine learning competence that we have an underlying data infrastructure platform. And from that, we can deploy products.
Yeah, and there's a lot to unpack there. It certainly does, and I think useful to lay this type of foundation because people often thinks of especially investment banks, right, as and especially one just as large as BNP is a sort of monolith, right? And here what you have is almost, actually truly an R&D center, right, within it. What might at first blush look like a financial company or a bank is in fact underlying it, a very important part in what you do. It's effectively a tech company, right? Just like Nickel is in style that way. Effectively a tech company where you're innovating and coming up with certain solutions. Some of the things that you discussed in that were trends and sort of analysis, understanding, and the impact of how certain geopolitical or other events might impact perhaps investment. We'll unpack that in just a little bit. But before we do that, I want to take from the side what we were talking about a little bit earlier. You made a comment about Nickel, especially early on, the early adoption as it relates to institutions. And just to get people's minds into what things were like 7 or 8 years ago, they weren't what they were today. Now we see all sorts of partnerships with big banks and the Visas and the MasterCards of the world. They're making all sorts of acquisitions. But 7 or 8 years ago, banks were a lot more skeptical. So that makes Nickel in this case even more exceptional. Just to unpack some of the relationship, and I think it helps underpin, what Nickel does. Why, Thomas? Why was Nickel a little bit more attractive to larger enterprises from an innovation standpoint for this audience?
Yeah, right. First of all, I must say that Nickel was launched 8 years ago, but it has been bought by BNP Paribas 5 years ago. So just to understand, and so I think that our main asset vis-a-vis traditional banks or even other neobanks is our values, relies on our values. We have 4 big values since the very beginning. The first one is universality, second, simplicity, usefulness, and benevolence. I will start with universality. As I said, the main idea of Nickel was to bring the current account and the possibility to receive your revenue and to pay in your everyday life, and to make it very accessible to everybody. Because for some, in every market all across Europe, for some people, it can be a nightmare to try to open a bank account. And so this was the main idea. So this is universality. And on the reverse, our clients are not segmented. So each of our customers, they pay the same price to receive the same level of service, which is very different from other traditional banks. Simplicity, it's very simple to open an account with us. It takes only 5 minutes. And after 5 minutes in a point of sale, you have in your hand your payment card, your app, everything to manage your account. And we are the only one, and I don't know another competitor in Europe allowing you to have your payment card in only 5 minutes. Third one is usefulness. We have a very narrow range of products, just to make it very simple, very clear for our customers. For example, on our price list, there are only 20 prices, so it's very simple to understand the model for our customers. And then benevolence, it is true that we are not very expensive compared to other traditional banks, but there is a price for Nickel, 20 euro per year. It's not a low cost. It's we really want to provide the best level of service to all of our customers, and this is how we convinced more than 2.6 million customers to buy a Nickel account, let's say, and to stay customer. We have a very high level of satisfaction among our clientele. We have a net promoter score. I don't know if you are all familiar with it, but basically this is the difference between promoters of the brand and detractors of the brand. And the result is that we range across plus 55 and plus 60 every month. And this is very high. And this is how we capture even more customer, because the more customer we have, the more new client we have as well. So basically, this is a very simple model. And last but not least, as I said earlier, we are not only digital, but we are also physical, thanks to a wide network of point of sale. We have more than 6,600 point of sale in France, more than 900 now in Spain. And so for our customer, this is very important. They have someone to talk to, and they have someone where they can do some basic operations like cash deposit or cash withdrawal, and they have someone to talk to in case of a problem. So basically, this is a model. This is a very unique model, and this is also what we capture the attention of a large group like BNP Paribas 5 years ago.
Yeah, certainly. And speaking of capturing attention, Thomas, just to repeat it back to you, so the audience understands, a lot of those people who came to Nickel were first-time bankers. They were the unbanked or underbanked before, and that's where you were filling that need, Thomas?
Yeah, basically the first customers we had were unbanked people or people facing difficulties with traditional banks. But I mean, the more customer we have, and the larger the client base is. The simplicity of the offer and the transparency of the price also attracts new kinds of customer. People wanting to avoid the burden of the administrative cost of a traditional bank, or people wanting something very simple and which works very easily. And so we are widening progressively our client base, and let's say that people really facing difficulties with traditional banking sector only represents 30% of our client base for the moment. So, and this portion is reducing with the development of our clientele.
Yeah, and certainly I think that offers inspiration to this audience. There's always a market out there, and in your case, a lot of that was and continues to be either the unbanked or underbanked at Nickel. And Nickel ultimately, at least, is seen as a technology. Really, in my view, I think to share with this audience, it's more about innovation, right? And seeing an opportunity in the market and going for it. Obviously, BNP rewarded you with that. Speaking of just the broader technology subset, though, I think some of the things that you shared with us earlier, John, to unpack what you're doing at L'Atelier, from what we would almost describe as an R&D arm or R&D center inside of BNP. How do those new technologies that you're working on, or innovations or data sets, John, affect your everyday pedestrian out there, and or those who are in the audience who aren't necessarily really close to the inner workings of the financial technology sector? John?
Yeah, it's an interesting thing. The work we do would broadly be described as kind of prospective work or foresight work. But there was two strongly held beliefs that I had when we began this journey, and one of them was that people who try and use data to predict the future, to do that sort of trend analysis, they're generally speaking wrong. It's very, very rarely accurate. They put a lot of time and effort and cost into it to come up with something ineffectual, because the future is never linear. It's multivariate. There's intersectionality that changes the trajectory of the future all the time. And I didn't want to waste time doing that. So if we were going to use hardcore data science to begin to consider what the future looked like, I wanted to do it in a different way. So these two strongly held beliefs I had were, one, that I wanted to look at the things that had already occurred but not yet manifest. And that's a kind of a peculiar concept, so bear with me. What I mean by that is, if I go back 30 years, and to give you an example, when for commodities traders, they needed to wait until harvest results came out so they understood what the harvest was, and commodity prices adjusted accordingly. But now we have satellites that track weather patterns and crop behavior over time, and we know in live what that harvest is going to look like. So commodity prices adjust. Now, in that instance, the event has already occurred, it just hasn't manifested. There is no way for that to change. We already know what the range of the result is. If I walk out in front of a car and the car is traveling at 100 kilometers an hour and it's a centimeter away from me before impact, if time gets stopped right there, the event has already occurred, it just hasn't manifested. There's no way for that to be avoided. And I think that's what we're really looking for in one part. We're looking for very recent data and contemporary data that hasn't yet become visible to people, which is the majority of information, to be honest. We're always operating at a lag, and in some areas at a very significant lag. And our belief was that if we could use data science to remove a lot of that lag, we could become very intelligent contemporaneously. So that was the first kind of strongly held belief that we were adhering to. The second one was that the internet and the nature of information has changed quite dramatically over the last decade. The early internet was very, very much a manual search. You know, when you found yourself on the internet in the mid-90s, you had to do everything yourself. There was no guidance. You had to figure it out. Then we entered a generation of the internet where the idea of discovering random information was actually what a lot of the internet was built around. The likes of Dig and Stumble Upon being examples of that there was a great kind of satisfaction that users took from discovering information they wouldn't have discovered otherwise, and then sharing that information with others in various different ways. Like, look at what I've discovered that is unique that you probably haven't seen before. But we're currently in the midst of a generation of the internet where actually we're all herded towards the same topic at the same moment, because that's how we create virality. And virality is what pays. So if you think about Netflix, for instance, Netflix top 10, it wants to focus as many people's attention as possible on those top 10 at the same point in time, because that's where that virality gets triggered, which then they can commercialize. It's the same for all internet companies. They filter and funnel us towards the same information, the same content at the same moment. It's much more difficult to commercialize the tails. What that has done, though, unintentionally, is that everything that sits outside of that very strict set of parameters tends to get discarded, dismissed, and ignored. But there's a lot of significant information occurring out there. And that's the information that will fundamentally change what the future looks like. So we want to begin to develop models that were capable of identifying statistically significant outliers outside of a normal distribution. So which of those outliers should we actually be sitting up and taking notice of? How could we identify them, and how could we do it as a discipline? And we call this discovery science. And then we built a whole business around the ability to develop engines, ingestion engines, and build models that were capable of doing that. And we use a lot of advanced NLP to do that. In particular, we analyze massive amounts of data from like hundreds and hundreds of millions of documents across various different data sets to produce this analysis. And ultimately what we were able to output various different forms of intelligence products that are cutting edge, that can tell a company or a country where an opportunity lies or where a challenge might exist, but also where they might have longer term strategic dependencies. You know, we can tell country X that they're going to have a long-term dependency on a critical technology on country Y, which they're non-aligned with, for instance. So in terms of long-term technology security, that would be a very effective example of what we can provide. And a quick example of that, right now, as we watch what's happening with the Russian invasion of Ukraine, we're seeing that Europe and North Africa in particular are being impacted by the consequences of both the energy supply and the food supply being significantly hampered. Over the next 10, 15, 20 years, we're going to see those dependencies. Of course, we'll still see those, like energy and food will continue to be one, but we'll begin to see more of those energy-related dependencies. That if you have a technology-related dependency, if you have a technology dependency for a core infrastructural technology on a different country who is non-aligned and is able to cut you off easily, they could paralyze the country. And I think that's one of the things that countries now are beginning to become aware of, and by and large, they're our focus clients. So that's the nature of the business, but it gives us a very macro view of the way the world is changing, what's impacting customers, why they're making certain decisions, where that's driving them to. And because we also study the social side of it, we can see how economic frustrations migrate into social action in various different ways as well.
It's certainly, John, there's a lot to unpack there. I could almost say jokingly, no more questions, or we have so many questions. And inquiring minds, in the audience want to know. First, the observation is that this is much like probably from Hollywood or even Bollywood film. A lot of examples of people going back or into the future to see the future. The one that I'll offer up for me that I think is a popular analogy is the film none other than Back to the Future. The main antagonist, Biff, in 1955 gets the Gray's Almanac, and he bets and wins his way into the future in 1955, well into the future in 2015 or so, when the sequel takes place, and he's very wealthy. That brings up a few points, I think, for the audience, and I think working backwards, right, to answer the last question I had before the soliloquy you shared. It does matter. It does matter at the pedestrian level because of price discovery, which is another perhaps term to repeat back to you. I think you use a slightly different term, but effectively, just to galvanize one of your points, it's that having some predictive capability, even if most things are wrong, or you're plucking at noise, at sort of things that are discarded rather than what the sort of main river is reading through. Any potential opportunity to make markets more efficient can ultimately help distributors, suppliers, makers, manufacturers make better decisions about when and where to do something, and therefore potentially lower prices. So that might be, repeat back to a very important first point. The other is an interesting one you brought up, and I definitely know you'll respond to these, and we'll unpack the second one. I think Tomas has some to share with this too, and that's governments are coming for your consultation on. That's what I heard, and let me know if I got that wrong. For your consultation, so that they can see where their vulnerabilities are, not at just a community level, but perhaps like you said, energy security, perhaps the sort of industrial complex. And so on. So it certainly impacts, everyone. I want you to chime in. I know you had a response there, and then I'll ask my next question to you so that Tomas can also chime in. And that is a natural one, which is right, was when we will affect something with change. What is the consequence of that, right? Even if you do make more efficient, make markets more efficient, John, you do have an impact, right? And it perhaps, just like the fallacy or sort of a damage that can happen to any other model, it weakens that model because you are effective. I think that's a question that's weighing on this audience's mind. They're would want to know. But back over to you, John, and Tomas, please weigh in, because this is a very interesting conversation right here on predictability.
So to clarify, we don't try and predict the future at all. We try and predict the present. That's not something that people typically try and do. But it's right now, that's a very, very difficult thing to do, to predict because the information needs to be gathered, sorted, organized, structured, analyzed, understood in the moment in time. And we're trying to expedite that process through various forms of data science and artificial intelligence to enable that at scale. And so we're not actually trying to predict the future. We're not necessarily trying to tell you what's happening, a year in advance or 10 years in advance. We're trying to say that contemporaneously, this is the reality. Now, you didn't know that because by and large, clarity tends to exist about 5 years ago. We have some sense of clarity. Like, think about COVID, for instance. We have no idea how COVID has affected the world. And we're not going to have any idea from the 10 years. We have no clue. It's changed habits, it's changed behaviors, it's ended millions of lives, It's changed things fundamentally, but right now we have no idea. But COVID is the past and the present. Of course, COVID will reach into the future, but in this example, we're not concerning ourselves with the future. What we're trying to do is understand what that recent past and what presently is happening and how that is affecting us now. And that it might sound strange, but that is not something that can currently be done. And we're one of the only companies that are really focused on that. Our belief is that, you said price discovery, but with more effective, higher fidelity, contemporaneous information and data, we're able to make better decisions in the now that will, of course, then affect our future because we're more informed. We do have some predictive capabilities as well, but we do prediction in kind of a strange way as well. We try to eliminate the impossible. So we try to set the parameters in our predictive work and eliminate everything that can't happen, that sits outside our bounds of confidence. Say it's very, very unlikely for this to happen. So what remains is the likely outcome for this particular point of focus. But we do that in very specific, very precise cases for very focused things with very clear data and on reasonably short time horizons. So just to be clear, I think trying to predict the future is, generally speaking, a fool's errand. You have very effective logic, you can have very effective data, and still find yourself being, a million kilometers away from the truth of it. Like a black swan event happens tomorrow, and everything changes. At the moment, we're living through this extraordinary crypto crash that's happening. Any day now, something even more major could happen. It looks like it might. That could see contagion into the real economy, and as a consequence of that, we might see an expedition of negative events in the real economy, or the contrary. Today, China, there was a press release in China today saying that they may potentially have discovered alien life, that they have detected these peculiar signals multiple times now since 2019. If, for instance, something like that was confirmed, that could set off a chain of events that led to an enormous economic kind of like a bull run and a set of economic opportunities orientated around space. You just never know. So given that we never know, we just ignore it and avoid it and believe that if we understand the present better than anybody else, we'll make better decisions, and ultimately that will be to our benefit. So we try and predict the present and predict the recent past, which sounds peculiar to predict the past, but it's very, very difficult to do. And using COVID as that example, it's really difficult to understand the effect that COVID, beginning in 2019, 2020, had on 2021. We only know bits of that now. We believe that with our capacity, we can paint much clearer pictures to those sorts of questions. So we'll be to the contemporaneous truth before anybody else.
Yes, certainly, John. We covered a lot of ground already in 25 minutes with 15 or so to go, and it raises so many more questions. I'll get to you, Thomas, in just a second on advice for entrepreneurs, and this is in everyone's mind. Inquiring minds do want to know, John. It sounds like, and we can assume you probably have very significant resources, right? That entrepreneurs in this audience, investors in this audience, might not have at their disposal. So they might hear this actually with some dismay, a further gap, right, between what they're able to do. So is there a takeaway, other than the mindset and the paradigm is really useful to think about? Hey, there are ways you can predict the present or the recent past, and that is a very interesting paradigm to live in. And it does, and appreciate you drawing a distinction from the future for the entrepreneurs and the investors out there to get to a clear question. John, what can they gather from this besides that mindset that you share?
Well, if I bring some heavy machinery and lots of sand and cement and blocks and timber to a field and provide you with all of that, it doesn't mean you're going to be able to build a palace. You need to have the vision and the pragmatism, the logic, the conceptual nuance to be able to see what you want to execute, and then the skills to execute on it. So I wouldn't say that we have an extraordinary amount of resources to achieve what we've achieved, but we've certainly outperformed organizations with significantly more resources, in part because we picked a very specific niche that actually at the moment is not popular. Everybody who's working in this space more generally is actually working on that filtration. How can you more effectively funnel the people to the one point of content at the same moment? We are looking at the stuff that's really unpopular at the moment, the niches that exist out there that nobody else is really looking at. And we're also targeting customers who aren't typically targeted. European state agencies are not typically a cohort that people create product for, but we are. So we find ourselves with a small amount of resources doing something very sophisticated and having some major breakthroughs with a small team based on a high level of conceptual nuance and effectiveness, a clear vision of what we want to achieve, and the fact that we're operating in a space that is not popular at the moment for cohorts of clients that are not typically commercially viable. We believe that's all going to shift, but that's where that vision part of it comes in. We're trying to be ahead of the curve. And I think there is a similarity here with Thomas, because again, I remember when Nickel was launched, and I remember, like, I've worked with banks for a very long time. I remember the response to it. And it's important to understand that there are cohorts of customers for whom it's very difficult for banks to service, because banks can't disconnect their simplest product from the most complex products. That's not possible within a licensed banking institution. It's also financially very complicated for them to service retail at that level too. It's not that they don't want to necessarily, it's just a very difficult thing to do, especially within the compliance licensing protocols they have. So for Nickel to come along and be able to identify, one other thing I think, and maybe Thomas would agree or disagree with this, the thing about the unbanked is, historically, especially in banking, we've been guilty of assuming the unbanked are all the same. I have never thought that to be the case. The unbanked are totally different. The banked are very similar. People who have bank accounts are very similar. The unbanked don't have banking facilities for 1,000 different reasons. They're really not that similar at all, and they change from country to country to country. So to have a scale proposition at a bank that can service that cohort, that community, is a very difficult thing. And that's why, like, it's what Nickel did is such a huge innovation, because it was so elegant and so simplistic that it was able to identify this group that nobody else could service, like what we're doing, identifying groups that nobody could else service financially, and find a business model that actually was profitable. Like, that's the key here, isn't it? So for the audience, they're always the success stories. I think you hear this over and over and over again. Doing what everybody else is doing rarely gets you success. Find the cohort that nobody else cares about and find a way to service them with what they need profitably, and you will develop sufficient momentum that you can ultimately succeed. And that, I think, is the bridge, the similarity between our two businesses.
Yeah, certainly. And I'll let you tomorrow respond to John, and then we'll have another batch of questions around some of the things the audience wanted us to cover. Ask around cryptocurrency and the interest in there. Thomas, though, to respond to John.
Yeah, I fully agree with what John just said about the success of Nickel, is that we were able to serve one customer segment that nobody other could. So that's really part of the initial success of Nickel. And it's true that we live in a very complex world, especially around payments, and we see so many initiatives due to DSP2 regulation, etc. So there are so many actors coming in this market, and it is difficult to know who will be the winners and and who will not win. So we live in a very complex world, and the answer that we bring, Nickel, is that we know clearly what is the promise we make to our customer, is to allow them to manage their money on a daily basis, very simply, in a secured way. So and we try to be very focused on that, on that need, which is a very universal need. We all need a bank account to live in their everyday life. It's not possible now to live without a bank account, or it will be very, very difficult. So we clearly know what need we cover, and so we keep very focused on that. And it's not that we don't see what's happening around us. Of course, we are trying to analyze what's happening and the complexity of the world we evolve in. But every time we have a new project, etc., we try to be very focused on the customer need we cover, and to be very to be focused very on that, not to and to keep our DNA our key factor success. So our key success factor. Sorry. So that's what we do to analyze the world in which we live in. And so if we come to crypto, maybe I can give you my view on that.
Yeah, definitely. And just for the audience benefit, for everyone following along, we heard from John about some really exciting things about predicting the present, to be clear, and not to dilute things, but there's potential there to read in the future a bit. But predicting the present, and what might be more resources available, but he did push back on that, which is great, mainly because the audience full of entrepreneurs and investors. You don't want to see how they can benefit. And I think you share that really well, Thomas, right? By focusing, certainly when you started Nickel, you didn't necessarily have more resources or manpower or what have you available, to use John's analogy, right? Of sort of showing up with lots of building materials to know what to do with them. It still starts with the entrepreneur, and to both of your points, to galvanize that, focus on something and look where the opportunities are in the market, and there still are opportunities out there that you see, right, Thomas?
Right. As I said, we are trying to expand our success outside France, all across Europe, because we are very convinced that in every market that we studied, there is a need for a very simple, accessible product like nickel, distributed through a physical network of point of sale. And this is, the idea is very simple, but it's true that we are almost the only one in doing it the way we do. So that's where the potential is for us now, is to expand our geographic footprint.
Certainly, and you mentioned opportunities. You also mentioned cryptocurrency. You saw me pick up on that to lay a little foundation for the rest of this talk. And maybe we'll touch on some other things too, gentlemen. But weighing also on people's minds, and right in front of center of them, using John's analogy, that main river, a lot of news is out there about cryptocurrency, especially the last 2 years. And even countries, right, like El Salvador and more recently Honduras, some African countries adopting them as their native currency. In the same vein, though, we've seen the World Bank and other large institutions counter that, say that they're risky, they probably shouldn't be used, and then lay even more foundation to mount. And we'll get right to you with the questions on your take on this. There are myriad cryptocurrencies. Most popular sort of nomenclature out there, of course, is Bitcoin. It seems that there's hundreds of millions of people at this point who own at least some sort of cryptocurrency, according to the data that we have, if not more. And a lot of that is usually Bitcoin or Ether on the Ethereum blockchain. But your take on how that that play unfolds, Thomas, is that really the future? Are we all going to adopt some sort of cryptocurrency and do away with fiat? Interesting to hear what you have to say, given your role in banking and neobanking, Thomas.
Yeah. As I said, we are very focused on the providing a daily service to our customer, and for the moment, at least, cryptocurrencies are more an asset in which you can invest rather than a payment tool. So, and for me, I mean, of course, the blockchain is a very powerful technology, but for the pay with crypto mayonnaise to take hold, I think it will be necessary to combine several ingredients, such as number of users, trust, development of crypto cards to pay with, because cards are still very essential. We need several initiatives from PSPs and mobile app managers. We need a competitive business model. We need a fluid omni-channel path. So, I mean, I think that for crypto to be really a payment tool, I mean, it will take still a lot of time. And so that's why, for the moment, within Nickel, we do not provide cryptocurrencies, because we will do it only when you will need to pay for your daily spendings with crypto, and which is not the case for the moment. So this is how we keep very focused on our customer needs for the moment, and they don't request to pay with crypto for the moment.
Yeah, and just to repeat that back to you, perhaps useful cryptocurrency are useful as an investment, which is a term we can unpack immensely. It's a loaded term, but still too soon in your view for sort of like everyday transactions and change. Effectively, banking as pedestrians know it. It begs the question then, Tama, why bother? Will it ever be useful, Tama?
Will cryptocurrencies could be useful for people? You mean to pay with crypto?
Yeah, for banking.
What?
Yeah.
Yeah. I think that the the future of blockchain technology in the financial industry will be driven by regulation. That's my point of view. I don't know if John shares the same vision, but I think that the use of crypto and decentralized finance to penetrate our daily life will be driven by regulation. For example, CBDCs can completely disrupt our relations with our bank, establishing a direct relationship between private individuals and corporates with directly the central banks. And that might have some advantages, like in fighting against frauds or money laundering, etc. So that can bring something new, but for the moment, I think we are a bit that we are really too much in advance for that. And the adoption of digital currency will probably be very progressive and will take quite a long time to be adopted by everybody.
Yeah, interesting take. In the interest of time, John.
I think certainly crypto will be part of the future, but I think there's a couple of things that are always worth to keep in mind. First of all, banking is a very complex space, complex industry, complex activity, and I think the general population don't appreciate just how complex a process banking is. And I think that crypto, for the most part, is filled with actors who don't have any institutional finance experience and are very naive when it comes to banking activity, transaction banking, custodial banking, investment banking, the regulation and compliance constructs that oversee that as well. That is a really, really complex thing. Banks are very effective at it, and it took a long time for that to happen. And people might not realize it, but it required a whole lot of innovation within banking to get to the point that we're at now, to create a system where people can do the things they currently do. And I don't think that should be ignored. I think we're often guilty of forgetting that. We think banks are easily going. FinTech told us that they were going to replace banks. It was never going to happen for a variety of reasons. The cost of customer acquisition, the cost of building a deposit base. The idea that a retail proposition was going to come along and do this was always naive. And it's the same. I think when you look at a lot of crypto propositions now, some of them are really problematic. Some of those projects are very opaque. It's very unclear how much legality, or how much of the infrastructure might be illicit or problematic. I think that a lot of stuff happens in the crypto space that could never happen within regulated finance. I think Thomas' point is right, that regulation is going to shape it, and that regulation is going to be caused by whatever the next 6 months looks like. If this crypto crash continues and gets worse and worse and worse, and we begin to see some contagion into the traditional economy, then the regulation is going to be very heavy-handed, and it's going to eliminate an awful lot of the active players. I do think crypto plays a part in the future, but it's worth expanding that concept as well. Like virtual currency, within publisher bases, within gaming, that's going to play. It has played for years. It's around longer than cryptocurrency is. It's going to continue to be around for a long time into the future. Brand-oriented currencies are going to have a lot of value as well, because there's underlying utility or value associated with them. Central bank digital currencies, like Tomas said, on both sides. First and foremost, for transaction infrastructure, for treasury services, there's going to be a real need for central bank digital currencies. That's going to be very interesting. And if it gets to a retail proposition, it's going to totally change the relationship between central banks and banks. Obviously, though, central bank digital currencies are not cryptocurrencies, but cryptocurrencies, there's so many of them. They do so many different things. There are many of them which are genuinely high potential. And I think in the future, we're likely to see more tokens connected to underlying value or infrastructure, like, for instance, energy. I expect in the next 10 years, we'll see a token that is reserved by units of energy. I think something like that will see mass adoption. We'll also see tokens for things where there requires a degree of anonymous recognition, like auction markets for real estate and elsewhere, where there's quite obviously a use case. But in many instances, crypto has really struggled to develop some effective use cases. It's had quite a long time now, but it's a very, very expensive, typically an expensive transaction fee, and there's some real user barriers to access it. For the majority of people, majority of financial users, the risk of you having to manage all of your own security is not something that most people are ever going to accept. The majority of bank customers don't want to have to manage all their own security and be lambasted when they make a mistake. The majority of those customers as well want to know that if their funds go missing or if they transfer to the wrong wallet, that their Bitcoin is not going to disappear forever, but actually they're able to get that back. Because anonymity is not a priority for most people. Most people do not subscribe to the digital libertarian philosophy of Bitcoin maxis. And I think that's not going to change anytime soon. I think the real reason that crypto has had so much activity over the last couple of years is because social mobility has declined so significantly. The traditional social contract is failing people. Middle class them is not accessible for most young people. They feel like they'll never afford a home or a holiday or be able to raise their kids or have a family. And that's what's pushing people to crypto in search of yield. And that's why people put their money into things like Celsius, that's saying that it's going to provide 17% yields. Like, anything that tells you it's going to provide 17% yields is a con. Like, that is, I think it's a historical fact that nothing has ever been able to say that with confidence and deliver on it ever. There's never been that investment. Of course, some companies and projects have delivered that, but not. That is because of single, quarter performances or single year performances. Nobody's able to do that year on year and year. And there's other crypto projects that are claiming they'll provide significantly more than that. And because of the opacity embedded in it, you can't see where that yield is generated. Clearly, a lot of them are Ponzi schemes. There's a huge amount of risk for unqualified investors. That's going to continue to be the case. Just one last thing, like in NFTs, for instance, in the last quarter of this year, $1 billion worth of scams on NFT exchanges in the last quarter alone. Just for NFTs, $1 billion. And as we begin to see more and more effective artificial intelligence, we've had some major breakthroughs in the last couple of months. The bots that target people with very custom scams in the crypto space are going to get more and more effective. So regulation will shape this space more than anything else.
Yeah, certainly, and a lot to share there, a lot to share. We wanted to let you run though, John, because some really interesting points that you brought up. I think one major takeaway is be careful out there. If you're skeptical and your intuition is going off that something's too good to be true, it probably is, to paraphrase what John just shared. But that's all the time that we have. Such an interesting, wide-ranging, fast-moving talk, really. Thomas Courtois from Nickel and John Egan Letele at BNP Paribas. I'm Jordan French, executive editor at Grit Daily News from New York. For all those of you folks out there at Webit, welcome back. It's been some time since you last saw me on this stage. And until next time, hopefully we'll all be able to do this in person.